Have you ever wondered how a pro investor stacks up against an amateur investor when investigating a brand new investment? In this video, we're going to have a showdown live, and let's see how an amateur investor stacks up against a pro investor. And what are we going to be investing in? We're going to be investing in
the macadamia farm. We've recently come across a very interesting opportunity in Malawi in East Africa. The purchase price is £2 million and the farm is currently doing about £200,000 in revenue. Now, this farm is not without its issues. It does require an update to farm machinery as well as new techniques. But for any sort of savvy investor that's willing to get their hands dirty, this is a great opportunity to make triple-digit returns in just a few years. The farm is also sustainable, providing income to local communities and training up small-scale farmers around to start their own macadamia farms, acting as a buyer for them. In terms of market growth, the macadamia nut market is growing at around 10% every year. And because of issues such as climate change, scarcity is becoming a problem. But this also provides an opportunity for profit margins to grow quite rapidly in this market.
So the way it's going to work, folks, is Abdul Milad has a portfolio of £100,000 and he needs to make a decision how much of that £100,000 he's going to invest into the investment that is being proposed to him. And then the exact same question is going to be proposed to me, and I'm going to be making my decisions on that basis as well. Neither of us has any prior context on this investment at all. We're going to go at it completely first principles.
Why this opportunity in particular?
Well, I think when it comes to sustainability, I think all your investments should be sustainable. So I think that's just more a layer when considering any investment opportunities, not this specific opportunity. But obviously, when you look at the whole portfolio and this specific opportunity, you want, especially when it comes to something like macadamia nuts, farming, we hear a lot of the things around, pushing out the local farming economy. And in this case, this farm is very much sustainable in that it includes the local farmers and actually improves their farms and makes them more sustainable.
Sure. In terms of the East Africa region, why that jurisdiction and why that region in particular?
So for macadamia nuts, obviously it's climate dependent, so it can't just be grown anywhere across the world. East Africa, especially Kenya, is one of the largest exporters of macadamia nuts, Malawi obviously being quite nearby. So just the climate and the soil is just quite fertile for that kind of product.
Now, what I'm also finding quite interesting is why macadamia nuts? Why not any other nuts?
Mm-hmm. Yeah, great question. So, obviously you have quite a lot of different kinds of salt commodities, coffee being one of the more famous ones, cocoa beans, for example. Here's your chance to really get into the core of quite a niche commodity, but it also means that, the opportunity for profit is a lot higher, given that the size of the market and, the number of sources available for macadamia nuts is limited.
As a potential investment opportunity, one thing that you mentioned was that there's a £2 million purchase price and £200,000 in revenue. Mm-hmm. Could you break down how those numbers are justified, how they have come about essentially?
Yeah, of course. To be honest, the purchase price is quite low, and I think that's just because there's not that many investors who are available to buy a whole macadamia farm. Obviously, it's quite a large capital commitment. I think one unique thing here, though, is because there is land involved and there is machinery involved. Those are both assets, and therefore you could get asset-backed financing. So if you look at I'm not sure who your financing provider is, but I'm sure you'll be able to get some sort of asset-backed financing to help you in the purchase of the farm. And then in terms of revenues, obviously £200,000, majority of the costs behind this are things such as the farm manager. So there's a full-time farm manager there, helping this be, kind of a bit more hands-off, but also obviously in terms of the maintenance of the machinery. In terms of macadamia trees, they do take a number of years to grow, but then they are yielding over time. So that's kind of how you have to kind of balance out the revenues.
Sure. And in terms of risks, every investment opportunity, I appreciate, has risks associated with it. What are the risks that I should be aware of in this?
Yeah, very, very good question. So obviously East Africa, Malawi, so the purchase price is in pounds. So you're kind of safe over there, but the local expenses would be in the kwacha, which is the Malawian local currency, and that includes a lot of currency variations, which obviously can affect you. So that's the first thing. Second thing is obviously with financing, given this is an international market, you may struggle to find financing available in, say, your local bank here in the UK for a project out in Malawi. And then of course, again, this being a niche market, demand is growing year on year. But again, that could have wild swings in the demand. And also from a supply perspective, you're not guaranteed a supply every year. Climate change is a big thing. The way you manage your farm, there could be a drought, there could be floods. and that would that would obviously affect your own production of the crop every year. So these are kind of the main risks that you'll face.
Having assessed Mohammed's investment pitch, with the funds that are available to me, I would actually invest the whole £100,000 into this macadamia farm.
All right, so Mohammed, the way I'm thinking about it is we've got a 2 million asset, US dollars in Malawi, and it's turning over 200,000. Net profit, you said, was 50%, so it's 100K actual profit. So what I'm thinking at a really high level is the asset itself seems expensive, but even before that, because it's in Malawi and because it's just so remote and so hard to get to, I'm very unlikely to invest in it. The only thing that's going to make me interested in investing in it is if the opportunity is so large that the risks, all of the risks associated with currency and getting over there and political risk and all of the other stuff, it's worth exploring all of that in order for us to even progress any further. Now, for me to answer that, I need a couple of things from you. The first is, what's the kind of market share that this farm has, do you reckon?
Yeah, very good questions. I mean, firstly, it's in GBP, in pounds, not in dollars.
Okay, fine.
But so I think the real opportunity here is the capital growth you can get. So, it sounds expensive, £2 million, but actually it's much undervalued, and precisely for the reasons that you mentioned, Malawi, but remote, currency risk, and actually, you could make triple-digit returns if you do up this farm and put it to its full potential. So thinking about macadamia trees, they take a number of years to mature. Here you already have a farm of mature trees. Talking about the revenue, sounds low, 200,000 versus the cost of the farm, but actually the farm is underutilized. And so if you manage to do it up, get the machinery in place, proper farm management, and you're securing the proper procurement contracts here in the UK, you can double or triple that very, very quickly. And so in terms of market share, obviously the macadamia industry is a couple of billion pounds in worth. So you're a very tiny slither of that. So rather think in terms of the margins you're making and how much potential the farm actually has in terms of revenue growth.
And how much investment would it take to get, let's say, from 200K revenue to, let's say, $1 million revenue?
Yeah, very good question. So I think the biggest thing is the processing machines to clean the macadamia. That, I think, is an estimated cost of about £100,000 in terms of getting that new machinery in. And then you're already almost doubling your production because you're able to process so much more. Of course, then there are a lot of other things that you can do. For example, you can add a little lodge there where you get a bit of agritourism. If you kind of sustain the trees, maybe grow the farm a bit, the land is quite large, you can grow some more macadamia trees. They're all additional things you can get. But in terms of just core investment to doubling the growth, it's only about £100,000.
Why haven't the existing owners done that?
Yeah, very good question. I mean, this is one of a very small portfolio of the existing owners. They've owned it for quite a number of years now. They don't live in Malawi anymore. They live abroad. It's just kind of a bit of a headache for them at the moment. Not a headache, but in other words, it's just a small asset they could just get rid of, basically.
And who's the operator? I understand they've got a manager there. Who is he or she? And what's their skill set? Do they have skin in the game? And do they have the skill set to be able to go on this growth journey?
Yeah, very good question. So the farm manager actually hails from India, as many of the senior managers in Malawi do. The previous owner is actually Malawian Indian as well. And so he's a very experienced, I think he has a degree in agriculture. He's managed multiple other farms, and he was brought specifically from India to this farm to be able to run it. So this is his full-time job.
And his family's there as well?
He has brought his family as well, yes. But you can see this person comes as an expatriate specifically to manage the farm. This is all he's going to do. He's not moving from farm to farm. And he's come here to grow this farm, up his income, and I think he may have a percentage of the revenues that the farm produces as well, but that will be negotiable depending on what you would like to do with him.
And how experienced is he? Is he the kind of person who could actually, because he's doing what he's doing, fine, but we're trying to do something different. Would he be able to do that? And let's say we acquired 3 other farms, would he be able to deal with all of that?
Excellent question, and that's actually precisely why he was brought. He was only brought relatively recently. And he's come with a lot of zeal and excitement, but obviously the previous owners, they just did not want to invest in the asset, and therefore he's not been put to his full potential. He's just kind of been managing it the way they've been running it. And so if you come in as some new bit of new capital injection, new face to the management board, I'm sure he'll be very excited to kind of really grow the farm. And if there needs to be more capacity, he has the connections to people who are experienced in agriculture, perhaps also from India, and he'll be able to bring that team alongside him.
And then if we're going to buy something like this, Mohammed, what's the legal situation and political situation, is this, is it actually safe enough for us to do that? Yeah.
Yeah, Malawi is a very, very stable country. Most of East Africa is very stable. They haven't had a lot of political turmoil. They've actually held it one of the most democratic countries in Africa. Very, very safe as well. So in that regard, you have almost close to no problems. Obviously, currency is always an issue, but again, you're purchasing this in pounds. The machine will be bought in pounds. You'll be exporting it to the export markets, which are denominated in dollars or pounds. So really, it's only your local costs that would be in the local currency. And to be fair, given depreciation, may even be in your advantage.
And what's the typical revenue multiple that these farms sell at?
Very good question. So it really depends on farm by farm, but it's about 2 times, 1.5 to 2 times revenue multiple. It depends also on the potential, the age of the trees, various other aspects, but that is generally what it is.
So how does this map up? This seems to be a lot more expensive.
Yeah, so the reason is because the farm is very underutilized, as in they have a lot more capacity for revenue growth than it currently is. And of course, you're also purchasing the assets of the farm and the land itself, and that has a certain value.
Who are the current people that they sell the macadamia nuts to?
Yeah, great question. This is actually really where you can make that big dent. So currently they have a number of importers here in the UK. They sell it on unpackaged, as in just kind of large scale crates, and in the UK that they will then go on and package it. So this is really if you can have access to local international buyers, as in whether in Europe or the UK or elsewhere, and you're able to get to that end buyer and sell perhaps a more premium or packaged product, you can make drastically increased revenue and profits. So you'll have their existing connections, but then you also will then have the chance to then find more buyers, because there is demand and people are looking for demand, and especially demand for sustainable macadamia, and especially if you have a story behind this, how you're supporting the local community, you can definitely charge a premium, especially when it's direct to source as well, so farm to market, which is not normally the case.
Final question: where do we lose money?
Yeah, so losing money is again the risks in agriculture. There are years that go up, there are years that go down. You are managing a farm. That means there are some years in which the harvest is just not what you expect, and there are some years when the harvest is over. You're obviously always predicting prices as well. There's not a very established commodities market in Malawi, and even globally for macadamia, not really. So hedging your risk is a little bit more difficult. If, for example, you have purchase contracts here in the UK with a certain quantity and you do not meet those because, say, the weather was not great that year, you're going to have to then purchase on the international market to make up for your contracts, and that can be, 1, quite difficult to source, and 2, obviously you'll be paying a premium for those. So you're always going to have to be looking at the prices and supply and demand, and managing that quite well.
So this is a classic agricultural business. The only challenge is that it's in Malawi, and genuinely whenever there's a big distance between you and the investment, it just comes with a whole host of issues that you really don't want to deal with: legal, political, currency, getting over there. If things go wrong, how are you going to get hold of it? Also, if you've never been in that country, it really takes time to understand the lie of the land in order to be able to do business there. So already I'm kind of against it. Now, in terms of the size of the investment, and if I was even going to make an investment, the only reason I would make the investment is because it might have some massive upside. But having talked to Muhammad on this, it sounds like there could be some upside for sure, but in order for there to be a lot of upside, we're effectively going to have to build a decent enough business, but out in Malawi. And there are many other opportunities elsewhere in the world where you could put in the same amount of time and money and effort and actually get a similar, if not better, return with a lot lower risk. So overall, I'm pretty much inclining against investing at all. And if I were to invest, the very first thing that I would do is actually go over to Malawi and have a look at the farm and understand it. And I would continue to double click and interrogate the scale of the opportunity, because if it is the case that there are a whole host of farms there that are ripe and ready for upgrading and for the expansion of their supply, and I have some unique advantage in being able to sell those materials to the UK or USA, and I can very quickly bolster up, using economies of scale, a big operation of macadamia nut manufacture in Malawi, that could be a possibility. But the likelihood is that I don't, frankly, have that capability or that skill set. So for me to be able to go out there and do all of that work just wouldn't really make sense. In terms of feedback on how Abdul Milad approached it, I think he asked some really good, interesting questions, but I think sometimes new investors, they almost play at being investors, and they ask the questions that they think are expected of them, and then they make the decision that they think is expected of them. Whereas more experienced investors are frankly a lot more cynical, a lot more pessimistic, a lot more jaded. They see a lot more of the risks, and they are asking really like focused questions around the cash flows. How are you going to increase the value of it? And also understanding the key business elements of how that particular business comes together. And then also asking a little bit about macro and a little bit about the broader things. I think Milad focuses a lot more on the broader things because they're kind of the easy questions to ask, and a lot less about the very specific nitty-gritty stuff, which is actually where any investment is going to be won and lost. The other thing that novices don't really do is they don't really compare the option set fully. They just look at, this is the opportunity, do I like it or not? Gut instinct, seems all right, let's go for it. Whereas what they should do is think about, okay, as a portfolio as a whole, even when I walked into that conversation with Muhammad, I knew that I wasn't going to put more than 10-20% maximum towards this because this is going to be high risk. Whereas the average investor may not necessarily do that. Having a plan about your investment portfolio as a whole, and then also having a sense of comparing the investment options against others is really, really vital. And then the other thing I would say to amateur investors is, if you boil it all down, you're looking at risks and you're looking at rewards. Investment, a good investment, is where the risk and reward roughly balances out. So if it's really high risk, the reward needs to be really high as well. If it's really low risk, the reward can be pretty low. In this case, risk was quite high because of all the reasons that I mentioned. So I was trying to figure out if the reward had the potential to be really high as well or not. And unfortunately, I found that the reward was there, but it was probably around here, but the risk remained quite high. And so therefore this was a no-go. Whereas I think the average investor doesn't really focus on the risks, they focus on the reward bit, and they think, okay, if it's decent enough reward, let's go for it. But then that's where they get bitten, because that's where the risks will ultimately drag them down. So for new investors, these are the 3 things that you really should do when looking at any new investment. The first is, actually, without looking at the investment, figure out how you're thinking about your portfolio as a whole and where this investment, on the face of it, could potentially fit in. And so then you know what's the maximum and what's the minimum that you would even consider putting into this in the first place. The second thing to do is really understand granularly where the money comes in, where the money goes out, where the capital appreciates, where the value of the business is, and really drill down into understanding the levers around that. And then the final thing is, in the due diligence, make a list of all the potential risks and think about those and interrogate those in the questioning. And then also think about the scale of the reward on offer here as well. And if it's large enough or if it's small, and does it match up against the kind of risk that you're having to take. And if you'd like to learn more and improve your own skill set, there's a few things I'd encourage. First, of course, subscribe to the channel. The second is have a read of Halal Investing for Beginners, which is very, very useful. And also, if you are a high net worth, a sophisticated investor or accredited investor in the USA, sign up to the Curate platform and have a look at some of the investment memos that are written per deal, because that will give you a sense of how investment professionals approach diligencing different kind of deals and investments. And then the final thing, really, to improve your investments is make a few smaller investments and get into the swing of things, because there's nothing quite like putting your money on the line and learning off the back of that. That's it, folks. Hope you enjoyed that. If you would like to see more of these kind of videos, we'd love to produce them. Let us know in the comments below. Until next time, Assalamu alaikum.